Hey guys, this is Mr. Roxy coming at you live from Palm Beach in Florida. What day is it? It is February the 21st. It is Tuesday. I just returned from a whirlwind trip, visiting, amongst other places, my homeland, South Africa, Cape Town, where I was born and raised. But I didn't go there for pleasure only. I actually went to see a number of companies at the mining indaba in South Africa. What I want to do is give you a quick glimpse of what happened at the mining indaba. So this was the sort of welcome center for the mining indaba. There were approximately 6,500 delegates at the indaba, which is basically just an African word for conference. So it's a mining investment conference. I did mention this prior to leaving on my travels, and I said I would share some of the information with you when I get back. Well, I am back. I'm going to do better than just sharing the information with you, because what I am actually going to do is I am going to invite some of the mining companies to join me on our YouTube channel and speak with me. Give them an opportunity to tell you all about their companies and tell you what the investment thesis is, and then we can go from there. So this was the entrance to the indaba, or the Mining Investment Conference, which was held at the Cape Town International Convention Center in Cape Town at the southern tip of South Africa. It's a very beautiful city to visit. If you ever get a chance to go and visit South Africa, make sure to stop in Cape Town. This majestic mountain here in the background is Table Mountain. One of the reasons why it's called Table Mountain is because it has a fairly flat top, and during the day when the clouds sort of drape over the mountain, it looks like a tablecloth. And so it's called Table Mountain. This is a little shot from inside the Mining Investment Conference. As I said, there were about 6,500 delegates there, and I was fortunate to meet with almost 20 CEOs, CFOs, chief operating officers, etc., of different mining companies. And I'm going to share some of that information with you. Some of the meetings were in a nice, comfortable setting. This is a garden setting here where people are just gathering around, having lunch or a cup of coffee, and just chatting with one another about the investment thesis and why you should be investing in mining in South Africa. Well, what I really want to do is just take a few minutes, because during my absence, just a few days ago, so a week ago today, Devon Energy reported results and, of course, just crashed immediately. So let's take a quick look here at Devon. I'm not going to spend a lot of time with this, but I do want to just sort of take a quick peek and see what's going on with Devon. You can buy it for about $50. Well, I wish I had bought it for about $50 because I actually bought it at around $60, but I've added to the existing position since I have returned. Market cap around $35 billion. It is super cheap, trading on the left side of the 52-week range at around $50. Positive earnings, very good, solid positive earnings, a PE ratio of less than 6, a monstrous annual dividend. I'll come back to that one in a minute. Held by institutions, 72%, and only 1.7% of the float is short. So why did Devon Energy crash? Well, one can argue that the analysts got it wrong, and that's why Devon Energy crashed, because their estimates were out of whack. And then when the company reported, they actually reported fairly decent numbers given the where the commodity prices are currently trading. But the analysts didn't project properly, so Devon took a bit of a hit. Well, if we look at the valuation, only two things matter here, or are appropriate from a valuation measures point of view: the price earnings ratio, Devon less than 6, as I mentioned, and the price to book only 3.12 for the most recent quarter. The difference between the 2 years is the price earnings ratio is trading 12 months, and the price to book is the most recent quarter. Anyway, based on those two measures, Devon is very, very cheap. Profitability, well, Devon is actually a very profitable company. It outperforms its peers quite comfortably. On a gross profit margin basis, trading 12 months, so TTM, trading 12 months, 55%, operating profit 41%, net profit margin 31%, leaving the industry as a whole in the dust. So Devon is pretty good when it comes to profitability. How about effectiveness? So if we look at the return on equity, return on assets, and return on investments, here once again we're looking at trailing 12 months. Devon comfortably outperforming the industry, 58 to 35, 26 to 13, 31 to 19. So very effective in terms of comparing it to its peers regarding return on assets, revenue per employee, and revenue on equity, return on equity. How about the financial strength? You guys know by now, I always look at debt. Well, Devon's debt is a little higher, a smidge higher than the industry peers or the industry norm. However, it's pretty much in range. It's sort of in line. But the most important two lines for me on this particular slide is the quick ratio. And the quick ratio shows me that they have more than sufficient cash on hand based on the most recent quarter to cover any immediate short-term liabilities or current liabilities. Anytime that number is greater than 1, it's good. And as you can see with Devon, it is 1.2. However, from an interest coverage point of view, currently Devon has an interest coverage ratio of 20.69, showing you that the company will have no problem repaying its debt. So if we look at the slides from the quarterly results that they released last week, I struggle, other than for the fact that the analyst got the estimates wrong, I struggle to find any particular reason here. Now, obviously, I'm not doing a deep dive on the financials here. I'm not going into the balance sheet and the income statement or the cash flow analysis, but I'm looking at the company and I'm looking at the highlights reel, and it looks pretty good. It's like basically it's almost like stating the obvious here: strategy creating significant value for our shareholders. If we look at this vertical line here on this bar chart, you can see that for 2022, so last year, 8.6 billion. And then you can see it's funded here: light gray, dark gray, and very dark gray, almost charcoal. Acquisitions funded with cash, share repurchases, and dividends. Man, they pay monster dividends. I'm going to tell you about that one in just a second on the next slide here. Delivering an advantage cash return yield, right? The share buyback program and the dividend yield is approximately 10%. So what you have here is a stock that is rewarding the shareholders very, very richly. And as you know by now, Mr. Oxy loves dividends, right? So anyway, there's a number of reasons why Devon is a good play, and right now it is super cheap. In addition to that, they have a history of returning cash to shareholders, 30 consecutive years of dividend payments. One thing that you need to sort of pay attention to here is raising the fixed dividend 11%, and a large portion of the dividend is actually a variable dividend. So when you look at the fixed portion here, they've increased it by 11%, but we don't know what the variable dividend is going to be, for instance, for 2023, because it's too early in the year. Another couple of highlights here from the slide deck from their presentation. Total liquidity, approximately 4.5 billion, which includes cash and cash equivalents, right? So cash and credit facility. Cash balance, 1.5 billion. That's their cash position as of December 31st, 2022. Now, of course, we're already halfway through February, so that would have changed a little bit there, but that was a good, strong cash position to go into 2023 with. A relatively low leverage ratio as well. As I said, in a nutshell, there's not a lot wrong with Devon. You could argue that there's a lot wrong with the analysts in terms of their estimates for the quarter, but as a general rule, not too much wrong with Devon, the company. So, guys, that's sort of a quick wrap on the mining indaba and Devon Energy. Now, what I want to do next for you is I'm going to introduce you to a company. A little later this week, I'm actually going to set up a call with a company called 1-to-1. And 1-to-1 means pretty much exactly what it says. So they do 1-to-1 meetings for people like myself. So investors, institutional investors, pension funds, etc., get an opportunity to meet with CEOs and CFOs from different companies. Now, the one that I attended obviously was the mining indaba. So it's a mining investment conference, and 1-to-1 was the facilitator of the 1-to-1 meetings at the mining indaba, which was held at a separate venue but I spent 2 days there just meeting with people from different mining companies. So what I'm going to do next is I'm going to have a discussion with one-to-one, which I'm going to record and share with you, and give you a little bit of insight into some conferences that you may even want to attend yourself in the very near future, because they arrange conferences all over the world on an ongoing basis. And then what I'm going to do for you is, instead of giving you the Mr. Oxy version on certain companies that I think are potential investments for us, I am going to kick it off with a couple maybe of uranium mining companies, and then invite the CEOs of those companies onto the channel to come and chat with you guys. They can introduce themselves and their company, and then they can tell you what the investment thesis is and why you should possibly invest in their company. And I'll give them a chance to add any additional comments that they might want to add in terms of why you should be investing with them. So guys, on that note, this is Mr. Oxy. I'm back in the saddle. I'm live from Palm Beach in Florida, and I will be probably firing off a few videos in rapid succession as I introduce you to some of the companies that I met with, obviously subject to their availability, because we need to book times, and some of these companies are domiciled right across the world. But I'll do my best to introduce you to some of these companies, give you the investment thesis, and then you can decide yay or nay. So on that note, this is Mr. Oxy saying thanks for watching, signing off, and I'll talk to you guys soon. Bye-bye.